Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on. We've seen the price moving quite rapidly to the downside. We haven't actually gone down into a new local low just yet though, and some interesting things have been going on with the charts. We're going to be spending some time taking a look at the price action, but before we do that, we're also going to review what's been going on with the on-chain metrics as well. Who's been buying, who has been selling, and whether or not that's going to help us kind of anchor in a little bit of what is going on outside of the price action. As I get into the video, if you find it useful, informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. If you haven't joined us in Discord either, check it out, linked in the description below. It's the first place that we go to notify you of everything that is going on in the crypto space. Let's waste no more time. Let's jump right down into this video and start talking about what is going on here with BTC. So what we'll do is we're going to start by taking a look at the on-chain data. The on-chain data essentially is a good indication as to kind of what is going on in the real world. Outside of just price action, we can actually see the participants, right? And we can track the psychology of what is potentially occurring for Bitcoin. And so let's just start with this page up here. So at the top right hand corner, we have the inflows, the outflows, and the difference between the two numbers. This is from the 1st of January through to yesterday, the 10th of June 2023. Okay, so 4.3952 million goes onto the exchanges and 4.3854 million comes off the exchanges, meaning that there's still 10,000 more Bitcoin on the exchanges at the end of the day. This is potentially deemed more bearish because more Bitcoin has been moved to the exchanges to be seen or to be made available for sale. Okay, so the only reason that you move Bitcoin from cold storage or your self-custody wallet of some kind is to essentially move it to an exchange to sell. You don't just move it there because you feel like actually that's a nice safe place to put my Bitcoin. Okay, so we look at it as a slightly more bearish situation. Now, it's by no stretch of the imagination is it a perfect way or a perfect analogy of looking at the market, but it helps us kind of steer a little bit as to kind of what is going on in the space. Now, we can compare these numbers against previous cycles as well. Okay, so before we do that, we can see here this is a line graph variant of that view. So you can see from the 1st of January here all the way through, and you can kind of see that we've got the difference. You can see where we have the occasional spike. The green lines the outflows, the red lines are your inflows, and so for the most part, we've seen an increase in the amount of Bitcoin flowing away from the exchanges. A little bit here, okay, but it is still very well balanced. As I said, 4 million Bitcoin going in, or 4.3952 million, if I can get my numbers out today, and 4.3854 million, right? These are well balanced between them, only 10,000 Bitcoin difference, and 10,000 Bitcoin is not a lot. But if we go back to the 2019 period, well, we can see something different. Okay, so from the 1st of January 2019 to the 10th of June 2019, the same time period, we can see that the volumes are vastly higher at 7.9899 million going onto the exchanges and 7.9654 million coming off the exchanges. Again, slightly more going on than is coming off. Okay, so again, you look at it in a slightly bearish way. After a significant surge to the upside during 2019, June is about the time where we started to see a bit of a pull to the downside. We can see more Bitcoin flowing to the exchanges. But the main takeaway here is that we have significantly lower volume being moved around the Bitcoin chain, but specifically to and from the exchanges than we had seen in 2019. Now, a lot of people are expecting the same outcome of 2019, right? We're in a bullish market, prices moved up rapidly, and therefore the price is mimicking what happened in 2019. And the price can mimic what happens in 2019, but the underpinned fundamental analysis of who is buying, who is selling, and the inflows and the outflows are vastly different. And so we have to understand that maybe we are not going to be repeating ourselves because the variables, the underlying data, is actually different than what had been seen previously. And so here we can see vastly higher volumes in 2019 than we saw most recently in 2023. But we can go deeper than that. We can go way back into the 2015 market as well. 1st of January 2015 all the way through to the 10th of June 2015. And we can see that we had 5.5007 million going onto the exchanges and 5.3832 million coming off the exchanges. More Bitcoin being taken away from the exchanges than is actually going on, so a slightly more bullish time, and the volumes are still significantly higher. So with significantly lower adoption and less participants, the volumes were higher. The volumes grew in 2019 against 2015, and yet here in 2023, with a lot of unfortunate people feeling really bullish on the market, we see significantly lower volume, and it doesn't really stack. And so I've been talking about this for months, right? And so over the last few days where we started to see some altcoins going down into new lower lows, none of this is unusual. None of this has kind of struck me as something that was unexpected in the space. And in fact, we can see it within this data. And we've been talking about it in the data for a very long time. And so for the most part, I think things are starting to progress, but we're still probably much in the early stages of what's occurring here. We can move on from here. We can take a look at the wallet counts, okay? The number of wallets that exist with very specific number of Bitcoin in them, okay? So in this particular graph, we have 3 line graphs, okay? Orange lines are the price, the black lines are the number of wallets with said Bitcoin. Okay, so over on the far right-hand side, and I probably have done this backwards because it should be the lowest to the left and so forth, but I've started it this way. So over here on the right-hand side, we are counting wallets that have more than 0.1 Bitcoin. Okay, that will mean that you can have 10,000 Bitcoin in your wallet and you will be counted here. Okay, so I'm specifically looking for wallets that have over 0.1 Bitcoin in them, and we can see there's a rapid adoption curve here. Basically, we can see the price action has, or as price action has been pushing up, so we have the wallet counts, and as price comes down, they've been buying that dip. Price comes down, they buy that dip. Price comes down, they've been buying the dip, right? And so we can see that this has been moving on up quite rapidly. And so these are very much so retail investors, right? And we talk about smart money. Smart money being basically a lot of institutional investors or billionaires, millionaires, just people with a lot of money, right? Smart money is what they call it. Not actually smart necessarily, but just a lot of money. And unfortunately, the term that is then thrown for retail investors is dumb money, because although they can be incredibly sophisticated, they don't have the power behind the amount of money that they're using to actually move the market, whereas smart money can move a market. So unfortunately, dumb money in this case happens to be coming into the market, okay? And so we can see here that this particular type of wallet count that has more than 0.1 Bitcoin in it has been rapidly growing, okay, as price has been coming on down. And this isn't terribly too unusual, but at some point we will have to see reversals in this. And this is actually something that is really quite basic, that a lot of people kind of skip over, unfortunately. And I'll just say it once and I'll say it again. Everything has to balance. It's a sum-zero game. Essentially, if someone is buying, someone is selling. Okay, so for these small wallets to be increasing like this, well, someone's got to be selling them the Bitcoin. And exchange, it's not necessarily the exchanges. Exchanges hold Bitcoin. They may decide to sell their holdings. But normally, more than not, it's other investors that are selling their Bitcoin to another investor. Sum-zero. There's always a winner, there's always a loser. Someone is buying, someone is selling, right? These are fundamental basics. And so as we kind of progress through here, we can see over 1 Bitcoin also rapidly increasing. Okay, there's now over 1 million wallets with over 1 Bitcoin in them. We can see the dolphins over 10 Bitcoin also rapidly increased recently. And you can see there's 156,000 of those. And as we move up into the smart money side of things, well, we start to see a different story. Okay, you can see that the sharks, which are over 100 Bitcoin, these are professional level traders. They don't always get things right. Sometimes they do some absolutely fantastic stuff, and sometimes they just make some really catastrophically bad mistakes. Recently, they've been accumulating. You can speculate as maybe these traders have seen something in the charts that, you know, making them bullish. And sometimes you might say they've just made a mistake, or I don't know what on earth they're playing at, all that kind of stuff. Over here, you can see that they haven't been massively too involved recently. They slightly bought up a little bit here, but nothing terribly too much. Actually coming down over the last few days at fraction. 16,000 wallets with over 100 Bitcoin. The Bitcoin whales, however, 1,000 Bitcoin or more, they've been, well, accumulating and now they're not, right? So we can argue, are these guys manipulating the market? Are they pushing the market in the directions that they kind of want to grab liquidity and all that kind of stuff? You know, we can speculate until the cows come home on that one. But essentially here, the facts are these wallets are decreasing, okay? And we can see them here. So recently, on the 26th of May, they peaked at 2,039. And as of yesterday, they were 2,020 wallets, okay? So we can see that there's a bit of a move to the downside here. Now, the other thing to bear in mind, these graphs are only showing us the last 90 days. We can go deeper than that, and we will do that in a moment. Now, the Kraken size wallet, which is over 10,000 Bitcoin per wallet, we can see has been peaking up here in April 12th with 121. They dropped down as low as 115, back up again towards the 119. A couple days ago, they were down at 116. Right now, they're 117. Okay, and again, these are the ones that are, in my opinion, moving the market. MicroStrategy would be classified as a Kraken in this particular case. I think other analytical companies call these wallets humpback whales, like, you know, many different ways of kind of articulating it. We did a community poll, we call them the Kraken. And we call them the Kraken because of what they did in 2018. But before I get into that, I want to kind of zoom out and take a look at the 365-day view. Okay, if we take a look at the sharks for the 365 days, we can see that they bought in the November, took it up and started selling into the liquidity that was provided from retail investors, and they took this all the way back down to where they started, and then they started to accumulate again. Now, as I say, sometimes they do some fantastic trades like this, and at other times they do not. And we've gone through the history of this before, where you can see they've made mistakes, okay? But for the most part, they've done a fantastic trade recently, and hats off to them for it. Now, they've been buying recently. Does this mean that they're expecting another surge to the upside? We'll soon find out. A lot of people are speculating on the Fed, FOMC, and all that kind of stuff. So it'll be interesting to kind of see what happens there. Now, the Bitcoin whales, when we take a zoomed out view of that, this is actually the realistic view of what has been going on with people who have over 1,000 BTC in their wallet. And unfortunately, that is an incredibly bearish way to look at the market. We've seen a lot of retail investors buying. We say dumb money, smart money. So it looks like smart money has been exiting the space for quite a bit of time. In fact, pretty much throughout 2022 and 2023. And unfortunately, dumb money, in the case of retail, has been coming on in. As I said earlier, there's always a buyer and there's always a seller. So if we are seeing an accumulation here of Bitcoin wallets that have over 1 Bitcoin in them, yeah, then we have to consider, okay, well, who is selling? And well, in this particular case here, we can see that the large institutional grade investor, the billionaires and the multimillionaires, are the ones that are coming out of the space, and they're using retail to do it. So with this, we can then speculate. We have the facts that, you know, large money is leaving and small money is coming in. But what is the speculation here? Well, the speculation here is that we probably have to go down deeper if we want to see the transfer of wealth occur. Because essentially, these institutional grade investors, these billionaires, these millionaires, if they're going to come back into the space, they're going to need to buy Bitcoin from the very people that they sold it to. This happens time and time again as well. This is not an unusual thing. What you tend to find is that eventually retail investors sell because they have either a necessity to do so, they require the funding, or they truly believe that it's all a scam, it's over, it's not going to the moon like they were told it was, and, you know, they end up selling. Now, when we take a logical approach to this outside of the emotional, we can say, okay, well, Bitcoin whales were selling over in the June lows all the way up into the kind of the August area, right? Hence, on the channel, we're saying we expect a new lower low. Now, we don't know what the catalyst for that's going to be, but we do know that it's not, the moves to the upside are not being backed by big money. And if they're not being backed by big money, they're short-term moves. Not only that, you have overlap in price action, and that's never a good sign either. So essentially, what do we see? Well, we see a breakdown into the November lows, right? And this is interesting because FTX was the catalyst for the November lows. But we also see here is that these institutional grade smart money investors are still selling. Okay, they're selling at the bear market bottom at the time, right? And they continue to sell, and they continue to sell into January. They continue to sell into February, okay? And they continue to sell into March 2023. So then the question simply becomes, do they still suspect a new lower low, or are they going to generate it? Or is there something else that is going on here? Because they were selling into the initial surge upwards towards that 30k range, right? And so why were they selling into that? Well, it's simple. They needed to exit liquidity. They still had positions they needed to remove from their portfolios. And, well, retail coming in and gave them the perfect opportunity to sell. Okay, so although price action has moved up, you can see that on that 90-day view that we were just looking at, this one here, it looks great that they've been buying up, right? But when you take that moment to actually zoom out, does it actually look that good? In the grand scheme of things, no. It's great to have seen a little bit of accumulation here, but it isn't overly impressive. It's nothing major going on. There's no big spike to the upside. There's nothing to say that big money is coming back into the space. And so the bearish sentiment still remains. Small, dumb money is coming in, and large, smart money is coming out. And until we see those matrix change, I think it's going to be very, very hard to generate a bullish market. Follow the money. I'm following the large money because I think that is ultimately where the right decisions are going to be made. Now, you might be thinking, well, that's all well and great and fantastic, but you also have this humpback whale, right? This kraken. They've been doing reasonably well. On the 90-day view, actually looks more bearish than bullish, right? But it's actually quite bullish from a certain point of view on a 365-day view. Bring it up, right? They've been accumulating during the bear market. You can see here that they were buying the June lows, they were buying the November lows. They were just buying, right? It was a fantastic buying spree that they were going on. Don't get me wrong, they still exited out a lot of their positions during that liquidity grab as price moved from the lows to the highs here. And again, this isn't actually going to be giving me confidence in the space, because if history does tend to repeat itself, and I don't mean price action history, but the psychology of people's behavior repeats themselves, then I think we're going to be in for one hell of a shock. And if we just take a look at 2018 for this particular Kraken-sized wallet, well, we can see that they did the exact same behavior in 2018. They were buying up every dip known to man during the bearish market, and then used it all to flood the market with excess Bitcoin, creating an imbalance in the supply and demand metrics, creating the actual bear market low down here. Now, you might be thinking, well, that's great. It's happened once before. It doesn't mean it's going to happen again. And you're right. It might not happen. But the behaviors are very, very similar at the moment. Ultimately, you've seen them buying quite heavily and aggressively during this bearish market, but we haven't seen this moment just yet. Is it coming? I don't know. Let me know your thoughts in the comments down below. Ultimately, the data is there to say this has happened before, and we're not talking about price action where I have different variables, but we have got a different economic stance. So, it may never happen again, but it's an interesting point of view here to say if this does happen, then things are going to be quite risky and quite difficult for a lot of people. Taking a look at retail investors from 2018, you can see that they were doing very similar things, basically aggressively buying up every dip, believing that the bear market bottom is in, and then eventually they realize that maybe it's not, and they start selling. And they're selling during this flat period of price action down here, and you can see that they're coming out. And as I said, there's always a buyer, there's always a seller. You know who was buying during this particular flat period in time? It was your whale investors. They were coming out during the bear market, not really participating, maybe just bouncing around a little, until retail investors are selling to them, then their price, then they are accumulating, right? And you can see the bear market bottom is here. There's a big spike right here. This is when the Kraken wallet started dumping, and then of course they come out a little bit and then accumulate again. Okay, so you can see the growth of these wallets during that 2018 period, and you can see where these guys were selling and then buying up after the bottom was in. You can see these guys were buying from the retail investors, and you can see these guys generated the actual bear market low. So where are we right now? Well, we've got retail investors buying up, and they haven't had any selling pressure just yet. You've got whales continuing to do nothing or come out, and you've got Kraken's wallet still just kind of accumulating or bouncing sideways. Ultimately, we're in the thick of it, in my opinion, and we're nowhere near yet complete. What about price action? Okay, so obviously knowing everything that's going on chain makes me feel quite bearish. Does the price action also make me feel bearish? And well, yes and no. Like, there's many different ways of approaching the market here for BTC. But for the most part, it doesn't look great. So if we take a look at this, not on a smart money concepts point of view, but from an Elliott wave theory point of view, if I zoom out of this for a second, you can see I've been tracking the idea of these nested 5-wave structures. Now, for those who do not know Elliott wave theory, it is reasonably complicated. There's many different things you can kind of talk about and articulate, and lots to learn, right? Implementing it is quite difficult. Understanding it is, I believe, is reasonably easy. So there's a course to this down at 𝗕𝗘𝗪𝗔𝗥𝗘.com, linked in the description below. Ultimately, though, in a nutshell, 5-wave structures. Let me draw one up here for a second, right? 5-wave structures have many different names. We call them impulsive 5 waves, or 5 through. Oh, let me see if I can get this. 3, and then 5. Coming in down here, that's really badly drawn, but hopefully you'll get the idea. Another 3 waves going up here, and then another 5 waves coming down here, like so. It's a 5-3-5-3-5, right? That's kind of what they say. So it's either a 5-wave structure, a 5-wave impulsive structure, a 5-3-5-3-5, and this is actually a really nice way of looking at it, because if you look at it as a 5-3-5-3-5 and you understand that inside a 5-wave structure, the bigger one here, so let me grab that, this 5-wave structure where we have 1, 2, 3, 4, and 5 is made up of 5 waves down, 3 waves up, 5 waves down, 3 waves up, 5 waves down, for example. Then, of course, you can say, okay, well, inside there's a 5-wave structure. So that would be a 5-3-5-3-5. And in that first 5 wave, there will be a 5-3-5-3-5, right? And it's kind of nest down. They call them degrees. Okay, it's really important that we understand that when you talk about Elliott wave theory nesting inside each other, really you're talking about the different degrees, you're talking about different time frames, and you're talking about building a big structure on a macro scale. Now, if I come and bring this back up again, we've got 5-3-5-3-5s all over the place here. And we've got all of these 1.618 target ranges coming down the side here as well. Okay, now there's a few things that could be playing on or going on in here. Just because you see a 5-wave structure doesn't necessarily automatically make it a big macro 5-wave impulsive movement, setting a trend to the downside. Can be a zigzag, can be double zigzag, can even be a triple zigzag. Okay, there's lots of things that can go on. But for the most part, to me, it's looking like we are building a very impulsive structure on a macro scale. And this is on the 1 hour chart that we're taking a look, and we're building this picture. Okay, now if I bring this to a daily, we can make it a lot easier to see. Okay, so right at the moment, we're looking coming down here to $23,937, because that is going to be the area that actually hits that impulsive trigger point. So to make this really simple, we'd have a wave 1, a wave 2 bounced up towards our 30K range. So we come down into this wave 3, and we can come down lower than 23,937, does not have to be exactly. Then we bounce up into a wave 4, down into a wave 5. And when you complete this, then you've got yourself either a giant A wave with a B wave bounce to the upside, that's your swing trade opportunity, then down into a C wave. Okay, alternatively, you'll go down into a wave 1, wave 2, wave 3, wave 4, then wave 5. To this effect. Okay, that's another option. That gets actually an impulsive structure. Then you go up in 3, and then because you start with 5 waves, you must end in 5 waves. And before you know it, you're less than 10K. Okay, a few different options at this point in time. Okay, because we're real early stages of this. There's the big bearish situation. Let me zoom out. Right, the big bearish situation, which is this is a giant corrective structure that is A, B, C, taking us down to $4,900 to $7,000. Alternatively, which one that I think is about to fail would be our W, X, Y, X, and Z. That basically means 19 to 12K or 12 to 19K. But I think that's not going to hold up much longer. So for the most part, yeah, I think our most probable situation here is going to be a zigzag or double zigzag, potentially a triple, but we'll see if that materializes. But for the most part, a big move to the downside is due. But we don't move in straight lines. And this is the thing that a lot of people will kind of get caught out by. But we'll see some green in the market. We will have a move to the upside. This move to the upside will be pretty healthy. It will look like everything is right on track. But essentially, it might just be another big trap. And we need to be very, very aware of these things. So caution is going to be the word I will say. Dollar cost averaging into these lows that we're seeing is a pretty wise idea in my humble opinion. I will be buying up some cryptocurrency altcoins at these prices. As I said, I would expect a swing in the market to the upside. So a DCA around here, I think, is a reasonable expectation. And on the off chance that I am wrong and we don't actually see this materialize to the downside, well, then I was able to buy a pretty healthy dip in my opinion. But I'm all about building long-term positions. I'm not looking for quick money. I'm looking for investments in projects that I think are solid and have great utility for the future, and ultimately things that I don't mind holding for 5 or so years. So when it comes to DCAing at these prices, I think, well, in 5 years, I think that's a pretty decent price anyway. Let me know what your thoughts are in the comments down below. I've rambled on for quite some time here. I'm going to leave it right there. If you found it useful and informative, smash the like button. If you are new to the channel, subscribe. And if you haven't yet joined us in Discord, check it out, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.